Chris says, call me. All right, let's get Chris on the show. Let's get his thoughts on where this market is and how to make sense of some of the market action that we're seeing right here. Amit, are you cold emailing PR departments to get more interviews? It's a mix of that, but it's a lot more networking. It's not really cold emailing yet. That is on my list of stuff I want to do, but it's a little bit more like I know a guy who knows a guy who gets me the person to talk to get an interview versus like just purely cold calling. Chris, good morning. How are you?
Good, man. Just enjoying that SMCI run up. It's nice because like I'm just looking at the portfolio.
Chris, how many six figures are you up today on SMCI?
A lot. I don't know. I'm not really looking at it. I hate SMCI for not SMCI. I hate Fidelity because they like, especially if you do leaps, they have a weird way of presenting it. So it's like I said, it's hard to calculate until like 3:30 in the morning when they actually update their mark to market. Then everything looks like, okay, there you go. That makes sense.
Okay, so here's the broader question. Like you know how to take profits. Are you taking out your initial? What are you thinking here?
No, for SMCI, I'm just letting it do its thing. It's got plenty of room to run, especially considering that the CEO said that they were going to double up their revenue, which is a huge driver in growth. If you look at their margins, they're able to maintain those margins, and I think they could actually expand them a little bit because if you know anything about like buying hardware, so a lot of people, they'll look at a company and say, look, they have hardware like margins, which is absolutely true. But what ends up happening is there's also service contracts and warranties that come with those products. So imagine right now you have this giant data center that you just built out with billions of dollars. You know, somewhere along the lines, you need that equipment to work. So if it fails or whatever, it has to be replaced. So who do they go to? They go to SMCI because that's who they have for every other server that's there, right?
Yeah.
So when I look at this as, hey, look, they're trying to get a dominant market share of the AI rack market. They're willing to undercut some of their competitors and take a little bit of a hit on margin early on, but later on they could actually, you know, they could actually end up driving higher margin revenues in the future.
Is it a buy right now or no? You think you kind of missed the run if you didn't get it?
I don't know. I mean, I think there's plenty of room for it to go up. Considering that the major drawback was just the accounting issues. And I think if the accounting issues get resolved, then there's no real like worry. But the asymmetric risk opportunity was definitely when it was, a lot lower than what it is today. So I wouldn't necessarily, like for any new people, I wouldn't jump in on this, only because at this point, you're taking a lot more risk and not getting as much reward as if you were when you were in the early 30s, because that's when the risk to reward ratio was in your favor. So let's say, when you think about it, think of it like this. Let's say they couldn't file their 10K. We would have lost all of our money, right? Yeah. But that's okay. It doesn't matter because we only lost a certain amount of money versus if they reported their 10K, this thing would go skyrocket, right?
That was the asymmetry there, is what you're saying.
Yeah. So the way that I always try to structure these moves is always, okay, what is the risk profile on this? Like, how much risk am I taking and what am I going to get? So it's almost like the way that I try to approach this with everyone is like, imagine right now you had a coin flip, right? If every time you flipped a coin and it was just heads or tails and you would get 100% return, that's not really a gamble that I want to take. But if you tell me every time you flip a coin, if it's heads, I'll give you 5 times your money, right? And if it's tails, you lose your dollar. Bro, I'll flip all day. I'll keep flipping for the next 5 years if you want, because that means that eventually it'll be a probability will be, based on heads and tails, but the total return is going to be based on that 5x return every time it wins. So
tell me, Chris, tell me what you think about the markets right now. Are we frothy? I mean, you see Ilya raising at 30 billion. You see some of these companies. You see Dave Portnoy launching meme coins over the weekend. Like, are we frothy or are we not, in your opinion?
In my opinion, there is definitely froth out there, but the markets can stay frothy for quite some time. AI is a revolutionary technology. I I definitely regret calling the death of AI a little too early. I thought that, like some of the news articles that I read with regards to like data being somewhat tapped out, those didn't actually those things didn't actually like come to fruition. And now everywhere you look, you're seeing like data, AI. So people are in an arms race right now with AI. So I think the best thing to do is buy the suppliers of those arms, right?
Elon said yesterday we are upgrading our 200K GPU cluster to 1 million, and it'll cost them 30 billion to do that.
I mean, that once again, and who's one of their main suppliers? SMCI. SMCI and Dell are the two main suppliers for Tesla and XAI. If you look at all the stuff on X with people posting, that's one of the things. If you go to my Twitter, you can see I've been posting about that. I was like, look at the racks. Who's the racks that they're using? They're using Supermicro.
Right.
Right. And the other good thing is that Supermicro also has a lot of capacity. Like they did invest a lot of money in extending their capacity in Malaysia, Taiwan, and the United States. So they have spare capacity to keep going with the new rack. So their biggest vulnerability is actually NVIDIA. Because if NVIDIA doesn't provide them with enough Blackwell chips, then they can't go to their customers and sell all this other stuff. So I think, to me, when I look at this, overall, I think there's still a lot of room for SMCI to go up, but the asymmetric risk proportion of it, I think, is pretty much done. So.
Intel's up 10%. Do you think this is BS or is it real?
No, I mean, I was reading about it earlier this weekend, and basically, there's two parties.
Let me actually play the clip real quick. We got a 2-minute clip. Let me play that from CNBC on this Intel thing, and then you talk.
Go for it.
There have been any number of bankers who've either been affiliated with one or the other companies that have been talking about this idea, given Intel's huge issues and enormous balance sheet on the debt side, as to whether you would get to the point where it would be split. Broadcom, we know, is at interest, as Qualcomm potentially has as well in the design part of the business. But it's more than complicated. It's so complex, and obviously has to involve the U.S. government, and whether a U.S. champion would be seen as a Taiwan semi, I think, is very much unclear.
And one of the other questions is, what's the motivating factor behind the world's leader in artificial intelligence chips, Taiwan Semiconductor, to even partner or acquire Intel's foundry business? One would likely be President Trump and the threat there of tariffs being put on Taiwan's chip industry, which would only add to their costs. And they're in a place in their growth cycle where supply is still very much an issue. And you all got to wonder, if tariffs were imposed on Taiwan, those costs would likely just be passed on to their two biggest customers, Apple and NVIDIA. I'm also curious how the relationship with J.D. Vance, the vice president, former senator of Ohio, works in favor of Intel, because they do have a relationship, given that Intel is in the process of building 2 plants in Ohio. So he's not by any means have a purview over the CHIPS Act, but just how that could play into the cards for Intel, because this could be what really helps set them apart and make Intel a great again. If there's only one company that can do this, it's Taiwan Semi. They're the dominant
you
player.
mentioned the largest customer.
So do you agree, Chris, that TSM can make Intel great again?
I mean, this is where you have to go back to what Morris Chang said. He said something about Taiwan Semiconductor. The reason why it's been so successful is because of just the work ethic of the Taiwanese and what they're willing to give up in order to build TSMC to what it is today. And he said basically he couldn't get the same quality of workers in the United States. And I think one of the complaints that he had was that. So my question is I don't know how TSMC could navigate around that. Maybe there's some new processes they could do with the workers and get more automation out of it. But like I said, if TSMC is running it, maybe they have figured it out. I don't know. But in terms of Intel, they're worth more as the two split up companies, right? So you've got Broadcom, who wants to take over their design business, and then on the other hand, you've got TSMC, who could spearhead their foundry business.
Right.
And, but the thing is, then the United States would end up losing out to two major, they would be losing out to an American, household name. So I'm not so sure that they would allow either company to basically 100% take it over. Maybe like do like a joint venture like they do in some of these other Asian countries where, if you want to partner, you basically buy a significant stake and then you just develop products together. So
Max 7 are basically flat for the year besides Meta. How do investors interpret that?
I think people are just looking for a lot higher returns. They're really like digging into other markets and finding things, and so that money is definitely rotating out of Max 7. But in my opinion, I looked at the Max 7 numbers. All of them reported really great numbers. I think the fear among people when it came to Google and Amazon and even Microsoft was that they're just going to spend a lot of money on CapEx. And the thing is, that's a risk that basically these companies are taking. I mean, if you're spending $75 billion on CapEx, like when are shareholders going to see that money? Or are they going to see that money at all if things don't work out? So like I said, some of these things are just being factored in and people are just looking for value outside of just the Max 7 names.
By the way, the dollar is it's up a little today, but I didn't even know we went below 107. But we are below 107 on the dollar, which leads to my next question. Grabby Grab, what the hell do you think is going on here?
Well, I'll tell you a move that I just made this morning. I actually bought a lot of the $10 calls that I had. Well, bought them back because I had sold them short. And I ended up selling the 750 calls because I was getting a juicy premium on the 750 calls. So now my position is basically a ton of $5 and 750 calls. And the thing is, because it was at a higher price, I was able to, get a lower spread on it.
Right.
So basically, the spread price for me is 50 cents for between $5 and 750. So it's almost like a 5x return if it gets to 750. And I don't think they're going to have a problem getting to 750 in the next couple of years, considering they're doing share buybacks, they're growing their business. Some with, so my thing is I take a little bit of risk off the top, hedged myself. And now I'm, now if let's say Grab does pull back, it's like, whatever. Okay. Most of the hits will come to the $7 call, 750 call.
What do you make of the retail mania over the weekend? Like, do you think it's going to be short-lived hype, or you think it has legs?
I mean, it depends on earnings, right? If earnings it's a really good earnings and they smash it out of the park, then I think that the momentum might carry them forward. If the call is not as good, or at least it's not as good as people expected, then it's more than likely that we could see this back in the fours again. But once again, this is one of those things that you just have to look at things outside of earnings, look at the company's quality, and I think that is what you should base your investing on. So right now, when I look at it, I see a dynamic CEO, I see cash flow going in the right direction, I see business returning cash to shareholders via buybacks, right? You're seeing them go into higher margin territories, higher margin businesses advertising and banking. So all of those things could play very well to their course, to their abilities and basically ride them higher. The other thing is because they've been able to scale up so much and they're the dominant player in a lot of markets, they don't have to do as many incentives as they did early on. So I think the competition is there, but they don't necessarily have to do as many incentives. So if you look at the example of something like Lyft and Uber, Uber is so scaled up now that they don't have to do nearly as many incentives to keep market share in most areas.
Right.
So that's the way that I'm framing my thesis on that. So.
All right. Sounds good, Chris. Thank you for joining. We got Grab earnings tomorrow and then NVIDIA next week, I guess.
Good luck to everyone on Grab. I hope everything goes well and this thing skyrockets, because once this thing finds a really nice base, it's like, okay, then it doesn't retrace,
Yeah.
The one thing, I know some of the people that were asking questions here in the chat, one of the things I would try to start to look at is things outside of just big tech and technology in general, because there's still a lot of opportunity out there. So some people are asking me about Venture Global. I think that there's definitely a lot of room for liquefied natural gas to be a big thing in the next 3 to 5 years, especially with the Trump administration being in charge right now. because their goal is to get our exports of energy to a much higher degree. So they're rolling back a lot of regulatory hurdles that the Biden administration had put on some of these projects. So these projects, as they're getting more greenlit, they're getting to construction phase, first to FID, then construction, and then they're going to be delivering cargoes all over the world. And I don't see a drop in liquefied natural gas demand. So, if you've been following me and Matt on Cash Flow Chronicles, we spoke about some of these companies. Venture Global just IPO'd, so they're brand new to the market. A lot of people don't necessarily know about them very much, but in my opinion, Venture Global has the possibility of becoming like the ExxonMobil of the natural gas export market. And this could be substantially like one of those things that could, set up a person and a family nicely. And the cash flows are nice too for it. So, their earnings are coming out, I think, on March 6th. So we'll get a clearer picture of what they're like. There are some fundamentals around the natural gas markets right now with the Russia-Ukraine situation that is benefiting natural gas. So all of those things will probably show up in earnings. So I'm looking for positive earnings, in which case this thing could lead to a nice higher move. So
Final question for you: would you buy Baba in China here or no?
I'm actually looking for an entry point into Baba right now. I think the Chinese, like the Xi Jinping at this point, understands that if they do want to eventually get to a point where, they have some level of technology dominance that's not being like basically throttling Chinese economic growth by the US, they're going to have to develop their own domestic base to do it. So one of the things that you're seeing is, man, they're probably doing a lot of it through IP theft, but they might be cracking EUV lithography sooner rather than later. So basically the chips that NVIDIA is making, they could theoretically make somewhat closely related chips. And the thing is, like with Alibaba and Alibaba Cloud, that's their major business that's growing at a really fast pace. They have a ton of cash on the balance sheet. So one of the things that Xi Jinping basically called all these business leaders in, and is just saying, listen, I need economic growth, and how am I going to do that? So he's unshackling the tech sector. So if you unshackles the tech sector at the same time stimulating the economy, I think that Baba is going to be a good beneficiary of that, and it's going to ride up higher. So I wouldn't necessarily focus too much on their e-commerce business as much. I'd focus more on their tech platform, which is Alibaba Cloud. So I'd say probably look at earnings and look at Alibaba Cloud growth in the future and see how that plays into the future for Alibaba. So yeah, Alibaba is a good place to be.
All right, I love it. Chris's Twitter right there in the chat. Chris, we'll talk tomorrow, and we'll keep going from there. All right, bye. So, Chris's thoughts kind of similar to mine in terms of the nature of this market. There is froth, but that froth could continue for a long time. And either this is the classic mistake that everyone makes when there's froth, which is that you think the froth can continue until it doesn't, or there really are enough tailwinds, macro, geopolitically, and earnings-wise, to keep the froth going. So I guess we're going to see.